Okay, hello everybody. This is Money Mentor Dan, and I'm here with Cynthia, who is a recent mentee of mine. I've been coaching her for a few months, and she is going to speak about her coaching experience.
Hi, everyone. My name is Cynthia Bassard. As Dan mentioned, he's been doing financial coaching with me for the past couple months. So I wanted to share with you guys my experiences and some of the topics that we cover during our sessions. All right, so this is my recap. We went through several things that we identified were important to me or that I wanted to get a better handle on concerning my finances. So one of the things that I very much so enjoy is travel, and I enjoy going to Japan. So as I travel there, one of the major expenses is hotels. So one of the things that was presented was researching homestays as a way to potentially save money, but still have decent accommodations. So I looked into that. It was good to research to know as an option. I did decide that's probably not the way that I want to go, just because I very much so enjoy luxury hotels, but also a lot of times I travel with my family, and homestays don't tend to want an entire family staying with them in their home. But it was a good option because sometimes I may travel by myself. So now I know. One of the other things that we spoke about is buying a home, because I would like to buy a new home. So one of the first things that we talked about was mortgage porting, a concept that I had not heard of before.
Oh,
It's when
Cynthia, can
you,
you introduce kind of your current situation there, home ownership wise?
yes. So I own a home right now. I'm paying a mortgage on my home currently still. And I would like to move to a different home. So in this case, you would be able to keep your current mortgage terms, which is a lot better because I think I'm like under 3% right now. And of course, we're at a time when the mortgage interest rates are at like 7 to 8% or something. So it sounded like a great thing, right? Like I could keep my mortgage terms and get a new house with those mortgage terms. There could be complications when the price differential is different from what your current mortgage is. Unfortunately, we found out that this is something that you can do in the UK and in Canada, but they don't really do this in the United States. Something to be on the lookout for, though, that we spoke about a little bit was assumable mortgages, where someone else has a mortgage that I could take on their mortgage as I'm buying their home. I haven't seen a lot on the market, but every once in a while you do actually see a house post that says it has an assumable mortgage. One of the other things that we talked about is because I'm thinking about buying a new home, I was planning to rent my current home, use it as a rental property. As we discussed that, though, the conclusion that I came to is that's not really something that I want to tackle at this stage of my life. And I would rather use that money to help me with my down payment and getting into a new home, and that it's something that I can still keep on the back burner for later down the road. But it was a good opportunity to really think about what I want and what I think I can handle versus what people may be telling me that I should do. Like, oh, you have a house, you should definitely go ahead and rent it out. Um, so we discussed that. Another big topic was stock investments and my retirement accounts. So we looked through how I'm allocating my paycheck currently. One of the changes that we made was that I was directly contributing into a Raw. And then we spoke about the benefits of actually going through and doing an after-tax contribution and having that automatically converted to a Raw, to go into my Raw, as a better course of action. Um, let's see. And then we also talked about my various investment accounts, the things that I was invested in, um, which Dan didn't have huge issues with, even if some of it was like not optimal to him. But I learned about expense ratios. It's not something that I really understood before, which is pretty much how much they're charging you annually And so trying to find investments that are good investments, but actually have lower expense ratios means that you can keep more of the money that you're investing. And then I learned a little history about Vanguard as well, and them helping to reduce those expense ratios in the industry. So I actually did change one of my one of the things that I was invested in for of essentially the same kind of product, but a better expense ratio for me. And let's see, estate planning and probate. So one of the major concerns for me is my family, aging grandparents, and just trying to get the entire families in finances in a solid place. So one of the things that we talked about was speaking to my father about what it was like going through probate when my grandfather died not too long ago, and how that's not really the path that we would want to take moving forward if anyone else were to die. So I learned about things like payable on death and transfer on death. As far as like ways that I can set up my bank accounts and investment accounts to have those beneficiaries already in place without needing to go through probate. So one of the things, as part of that, because one of the biggest assets that we have is any homes in the house, any homes that people own in the family, was to learn about ladybird deeds. Unfortunately, that was not applicable in Maryland, but I did learn that life estate deeds probably work in Maryland. But I will get back to that in a second. So part of going through and learning about these various things in estate planning was to create a list of the different bank accounts and investment accounts and the different assets like the houses that we have in the family for those that are closest to me, and making sure that we actually went through and they had beneficiaries on them so that we were taking advantage of this payable on death, transfer on death, avoiding probate information. And then the process I'm in actually at the moment is that we discussed that moving forward, a lot of what I want to do, I'm going to need an estate planning lawyer to really discuss the details of and decide the best course of action for our family. So I'm set up meeting with an estate planning lawyer, and that we talk through some of the things that we need to cover, like talking to them about the life estate deeds and just exactly what we need to set up for the family for our estate plan.
I'll jump in very briefly here. Can we stay on that slide? Yeah. Uh, some of these things are things that even if you work with a coach, that you will have to go through a lawyer to actually do. They have legal powers that obviously a coach does not, unless they happen to also be a lawyer. So even if you work with a coach, you may still need to work with a lawyer in order to actually, finalize some of these topics. If this is towards anyone watching, I mean. Okay, back to you, Cynthia.
All right. And then sort of a catch-all, we talked about some of my general spending and insurance. So food spend, we looked through that as like one of the major expenses that everybody has to have. So Dan noted that my grocery spend is actually pretty good. However, I have been spending too much money at restaurants. And that is definitely an area that I can cut back, even though it unfortunately means cooking at home more often. But I can cut back there and it will save me money because there was over $100 a month going towards restaurant spend. Then we also spoke about auto insurance. So we looked through what my allocations are in my auto insurance. And we talked about the importance of how auto insurance is for protection. because I'm not a huge fan of auto insurance. However, Dan convinced me that I do need to raise my liability limits, because it doesn't do me any good to have money and save money and then have an event happen and then money's not protected. So we talked about raising liability limits. And then we did also discuss that I could allow the company to monitor my driving and potentially use that as a way to still decrease the rates, despite the fact that I'm would need to spend more to have a little bit better liability limits. And then finally, we spoke about my life insurance policy that I got, I think it's been over 10 years or so now that I've had the life insurance policy. It was at a point where I couldn't even really fully tell you what all it was. I was at a different place financially then. But what we talked about was the guaranteed and the expected returns on the life insurance policy, and how at this stage in my life, it's probably not making me as much money as I could make if I were to just invest the money myself. So I'm at the place where I am strongly considering canceling my life insurance policy and instead going ahead and investing the money into my retirement. But this is something that I can bring up with the estate lawyer for further confirmation, like another take on anything that we may have missed as we were going through and seeing that the returns that were there were not particularly great.
Just to jump in quickly, Cynthia, part of Cynthia's reasoning here is that she doesn't have anyone in her life who would be badly in a bad situation if, God forbid, she was no longer here. So what's right for her might not be right for somebody who has got a lot of dependents. But for Cynthia in her situation, this is a reasonable approach.
Correct. And I think that was what I wanted to cover. So thank you, Dan, for the time and the coaching. It was very helpful. And yeah, overall, so for me, particularly with the life insurance, where right now that's like a losing money type of situation, being able to invest it should instead bring me returns of tens of thousands of dollars, if not more. So yeah.
Over, I assume, a long time horizon, not
Over a couple over a
years.
couple of decades.
Yeah, right. Okay, is that that's the last slide?
Yep, that's the end.
Okay, let's go ahead and unshare the screen. Okay, and many thanks to Cynthia for giving that presentation. Really appreciate you letting everybody know about what your experience was like with coaching, what kind of things you covered, what kind of benefits you're hopefully going to get out of it over the course of your life. And hopefully this will encourage other people to consider coaching as well, whether that's with me or somebody else. It is an extremely valuable thing, and I think that everyone can benefit from having a coach on all kinds of things in life, including money especially.